Good morning, everybody. Let's have a look at Bitcoin. We're just going to focus on Bitcoin because whatever altcoins do is probably going to follow Bitcoin at the moment. So in the weekend, we recognised that there was a lot of setups on 4 hourlies, right? For altcoins specifically, because Bitcoin had already had its 4 hourly signal the week before, which had carried it, from basically down at these areas to these areas. So that's all in the bag, and technically, as far as the 4 hourly signal is concerned, it's still actually in place. So with every second that goes by on this 4 hourly chart, it does say that it can go higher, and that is the truth of it. But if we look over to the MACD and the RSI and the money flow index, it's all printing bearish divergence, which isn't the biggest deal on the 4 hourly. In fact, we've been saying that we want to see it come down to retest this golden cross. That's one of the things that we really do want to see. And even better, if we can actually dip our toes into the CME gap, that'd be even better as well. So the bearish divergence on a 4 hourly doesn't mean a massive dump. It just means that momentum for this current uptrend is diminishing. But the uptrend is still technically in play from the Ichimoku cloud. We've got 3 components all still valid, and they're all still trending, plus a golden cross as well. So kind of mixed signals. As far as the uptrend is concerned, it's still okay, it's still valid, it's still going, and it could continue up to probably, I would imagine, at best, this level, 46,500. That's where we kind of lost this major area of support that we were dancing around in the initial breakdown over here, which was caused by the Megatron virus. That's what caused this dump. We were consolidating anyway, and then the virus took all markets down. So insult to injury, basically. So yeah, this area is where I would imagine to find a decent area of resistance, to be honest with you, which was previously a support, and that is 46,500 or thereabouts. So like I say, the uptrend is still in play. It can do it. It definitely can do it. Just because it's printing bearish divergence doesn't mean that it has to come down. It just means that currently the momentum is shifting, and you can kind of see that here. You could also draw yourself a nice little triangle for those who like those triangles, but the closer we get to the end of the apex here, without breaking out one way or another, does make it feel a little weaker than others. But I mean, this is a symmetrical triangle, so it's 50-50, could do either way. Again, I'm not looking for major moves up nor major moves down. Either one of them is neither bullish or bearish, I would say, because if we move up, we're likely to get a rejection here. If we move down, we're likely to get a support around here, so it's not the end of the world. So we move over to a daily just really quickly here and just have a look at what's going on over here. So we're still not actually diverging at the moment on the histogram. It's our first tick down in ages. Actually, we've been moving up for quite consistently every day really here. The RSI breakout is still fine. There's no bearish divergence on the higher term timeframes, as in the daily. Money flow index came from pretty much the bottom all the way up to the top. So it does make me feel as though there is a chance that we do push up to the top side of the range. Again, we've got this 200 exponential up here as well on the daily. That's going to offer a major area of resistance as well. Again, I'm not massively bearish. I've said the entire time that we've been coming down that this isn't a crypto winter. It's not a crypto bear market. This is a consolidation that's gained momentum due to overall status in the economy. We've got inflation, we've got rate hikes, we had the virus around Christmas as well. So all of that just made people want to take some chips off the table, including myself. And I've been buying back in here and down here. I'm not going to be buying any more, not until the market really does pick a direction. And if you really want to be absolutely confident that things are going to be looking okay, we need to reclaim this area here, which is all the way up here at 51,000. That's the 20 weekly. So that's like the line in the sand. Are you with the bulls or are you with the bears? And while we're below there, even though that obviously at one point we will reclaim here, and you can be bullish at any point and catch the absolute bottom and be an absolute genius. If you're looking for risk to reward, instant gratification, or just a bit more safety, you'd want to see this area reclaimed, and obviously that's a fair bit away from where we are right now. I'm pretty confident that we will reclaim that. I mean, if you think about the move that we're asking for there, it's only a 15.5% move from where we are right now. It's not that much if you think about what we're actually asking of Bitcoin. And once that's reclaimed, retested, looks to me like the bull market is almost certainly back on again. Might not be, but again, you're balancing the odds here. It's like going to the bookies. what are the odds? Are the odds in my favour, or are the odds are against me? And obviously all you want to do is make sure that you've got the most odds in your favour for a continuation. The long-term time frames, like the weekly, that's the most important thing that we're looking to achieve. The daily, what we really want to see is to be above this 200 exponential, and also it'd be very nice to get above this cloud and get a signal on the itchy cloud as well on the daily. That would be pretty powerful, and that would imply big moves. So what I'm saying is, in the short term, a move up or a move down, is equal. There's no, I really have no particular bias as to where it's going to move from this very second in time, to be honest with you. There's about as much and going for it as going against it. But either way, it's not particularly massively bearish, but it's also not particularly massively bullish. So you have to hold your hands up and say, that is the deal. Let's just wait and see what's going on with it. Like I say, I'm mostly a spot trader. My spot entries were here and here after selling just before this big dump down. So I mean, for me, it's a very casual state of play. It's all based on risk to reward and statistics and stuff like that. Now, there's one thing that we have to think about, which is looking beyond this chart, which is one of the reasons, like I say, that I sold a decent portion of crypto and mostly stocks, to be honest with you, around this kind of level, based upon the things that were taking place outside of the chart. In this instance, the major thing was the brewing problem with the virus. The new virus that had come out. The one that could hijack cars and run down pedestrians and stuff like that. It was a nasty virus, and people were getting scared of it. And so there was a panic sell, and it reminded me of the lead up to the panic sell over here in March, which was more aggressive. But it was like history repeating. Basically, it felt very much the same. So outside of the chart, there is things taking place, and today there's something taking place, which is the new inflation report, which is going to start. I think that comes out at market open in America. So I think that's about 2:30 today UK time. The idea is that inflation reports are going to come out higher than the last month's one, right? So last month was 7%. They think that this one's going to be up to maybe 7.5%. That's the prediction. And so when you think about that, that's what the expectation is. And so when you think about that being the expectation, you have to think markets, they've already been expecting that. They might have already priced that in, which is why the dollar kind of looks like this. This is your Dixie, the dollar index. And the dollar, having a weak dollar or a descending dollar kind of offers a bit of upside for anything that's traded with a dollar, so stocks, commodities, crypto. And so that might be part of the reason why we've managed to have a nice consistent uptrend over the last couple of weeks, really. And I mean, I know that it doesn't feel like much, but really from the bottom over here, it has been okay. If you think about what we've seen here, 35% for Bitcoin, to the top at almost 40% for Bitcoin, and then obviously we've traded a few other things in between that kind of done that, every other, in a couple of days. Some of these altcoins that we were trading, especially this week, since the signals that we were spotting on Sunday on the live stream, we saw VRA do, I think, 40% in a day or something like that, or at least in a 24-hour period. So you have to think to yourself, all right, markets are pricing in a potentially bad inflation report. So when the inflation report comes out, which will be later on today, then is it going to be what has been predicted? Is it going to be even worse, or is it going to be slightly better? If it's slightly better than what's expected, we would expect to see the dollar move up a little bit. Maybe not much, but it could be quite aggressive. So if we get like a 6% inflation figure or something like that, we might see the dollar shoot up, and then that would probably mean that just by pure default we'll see sell-offs on stocks, commodities, crypto, generally speaking. And so we'd look for a little bit of downside. So that would imply that the bearish divergence will be all it needs to take another leg down, and probably, hopefully, in fact, come down to fill the CME gap. That would be lovely, and also retest that golden cross. All of that coming in at around about 41,000 kind of area, right? Dip our toes into there. It might not happen straight away. I'm not looking for a dump, but that could be what happened with a positive inflation report, as in like good news, better than last month's. If it's what's predicted or worse, then what I would imagine to see would be a pump, and then probably a decent sell-off at that stage. The reason that would probably be the reason that would happen is that obviously this works opposite to the way that the dollar works. This was the last report, this one here. We got a report 7% interest, inflation, right? The inflation report 7%. Oh dear, big dump. then big bounce. Okay, that is what I would probably imagine seeing, and the reason for that is that initially the markets will respond to the figure, and then once they've had their little move, they will recognize that probably the Fed are going to go in a little bit harder than the optimists would expect, and they would probably go for the 50 basis points, which isn't massive, but it's enough to shock the market if that's what their decision, and that's probably what they would do. It could even go higher than that. I'd be quite surprised if they did, because it would be pretty bad, the shock of the market. The idea is to try and balance inflation with markets. Really, you don't want anyone to get particularly hurt, but the importance, the main thing is to focus on the inflation. So they will adjust to tackle inflation, because that's worse generally for everything, right? So we'll know more at markets open. So for us in the UK, it's going to be 2:30. That'll be 8:30, I believe, in America. So that's what we're waiting for, and that's going to have an effect on markets today. So chart-wise, it's 50-50. So it stands to reason that inflation report is going to be the main thing to focus on. So I would imagine that it might not be the case, but I would imagine that this price is going to meander in this sort of maybe just within this triangle, this symmetrical triangle. It's going to meander in there for the best part of the day until the inflation report comes out, and then it will pick its direction. Good inflation report, so 6% or lower, would be an immediate drop. A bad inflation report, so 7.5% or higher, will be up and then down. Okay, so this is what we're looking for. So you could argue that we want to see a good inflation report for the better move, the initial move down, retest of these areas, and then move up as a result of that. A bad inflation report would be good in the very short term, a bump up to this probably just 46,500, and then tailing off thereafter as we wait for the rate hike to begin in March, which would be worse. So we want inflation to be dealt with, because it adds overall general stability to the market. We don't want the dollar to die, despite its inevitable inflation, which is always at between 2 and 2.5% year after year after year. That's normal, and that's why we want to have things invested. That's why we like investments in stocks, commodities, crypto. That's why we like it. Generally speaking, it's better than having it in a bank, generally speaking, most of the time, depending on obviously what you've bought and what you've invested in. But yeah, the best scenario would be to keep inflation low and to treat the markets accordingly based on their projections and their charts and their fundamentals, not on having to stick your ear to the ground all the time listening to what the Fed are going to do to try and tackle the inflation. So we want inflation to be sorted out. My expectation, though, I think the markets have largely priced in a poor inflation report of 7.5%, which is why most things have trended up like this and the dollar has gone down. So unless it's extremely bad, as in like much worse than we expected, I think what we're most likely to see is markets probably just tail off anyway towards the end of the day, and throughout the rest of this week probably edge our way to at least this 200 exponential for a retest of that. Anyway, I'll leave it with you there. Hopefully that was useful for you. We don't need to look at all the altcoins today. We did enough of that on the live stream for Patreon members only. If you want to join, there's a link in the description, as well as loads of other links as well that you might find useful. Right, thanks for watching, guys. Hope you have a nice day. Take it easy.